The next awesome opportunity is going to be when gold and silver pull back and we have a bit of a recession. And that is going to be like a really great opportunity to get into precious metals again, hopefully in 2025. And after we do that, it's going to be something similar to this. We're going to see the market shake out, and then we have a multi-year rally in gold, in silver, and we're going to see the same thing. So gold may pull back, and then we're going to see a huge multi-month run rally in gold, 3,500, 5,500. Once we have a market correction, I believe silver will probably be like $50 and $80 and potentially higher, much higher.
Gold continues its bullish streak, achieving a third consecutive weekly gain and reaching $2,743.33, bolstered by its appeal as a safe haven amidst geopolitical tensions in the Middle East and growing uncertainty over the upcoming U.S. election. Despite strong gains in the dollar and rising yields, gold has managed a notable 32% year-to-date increase, illustrating its resilience in volatile times. Market analyst Chris Vermeulen believes gold's current momentum could push it slightly higher in the short term, yet he suggests the most substantial gains may already be behind us. He emphasizes that an anticipated pullback, likely in 2025 amid a potential recession, could offer a strategic entry point for long-term investors. Sentiment around gold's near-term performance has recently cooled. The latest Kitco News Weekly Gold Survey revealed a decline in bullish sentiment among industry experts and retail traders, with both groups showing an almost identical distribution of expectations regarding gold's upcoming price trajectory. Vermeulen highlights that this correction could begin a robust multi-year rally, potentially propelling gold prices to as high as $3,500 to $5,500. However, Kitco senior analyst Jim Wyckoff maintains that fundamental and technical factors support gold's price, noting that its steady rise is reinforced by safe haven demand, which provides a solid price floor. Vermeulen underscores that gold's momentum often signals a shift away from riskier assets in response to global economic concerns, a pattern seen during the 2008 financial crisis. During such times, the US dollar typically strengthens alongside gold, reinforcing its role as a secure investment. This latest rally saw gold hit a new record of $2,758.53 earlier in the week, defying traditional market correlations with rising yields and a strengthening dollar. The dollar index climbed to 104.24, marking its fourth straight week of gains. Yet gold has retained its momentum, highlighting its enduring strength as both an investment and a hedge against market instability. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think gold, I really like gold as a barometer of what's going on with major markets. And if we take a look at the monthly chart of gold, we can use a simple tool called Fibonacci extension. This tells you the momentum from a previous move, if that move continues, where it should go. And if we were to really go from where the bottom was of the beginning of the previous super cycle back in 2001, 2002 area here, and we go all the way up to the high. So this measures the momentum of that rally. And then we bring it down to this low in 2015. If we carry that forward, I use two measured levels on here. I use the 618 level and I use the 100%. And I use this for any asset class, not just gold. This works really well for everything on any time frame. Fibonacci to me is one of the most powerful tools. But based on this rally up, the strength of this pullback, the general rule is if price comes up to the 618 level, which is a 61% rally of the previous rally, and it takes a pause, then we're usually going to go up and hit that 100% measured move. That's what one stands for. This rally up is equivalent to this initial rally. And so this is a pattern that started obviously 13 or 20 years ago. This is a huge pattern. We can even draw another one from this low to this high and this low, and it actually comes out to the same spot. So we have multiple massive cycles and Fibonacci levels coming out to this price. And what is really interesting here is when we look at how gold performs at certain stages. So we've had this multi-year pause. And during this pause is when stocks have skyrocketed. This was right after COVID. Nobody really wanted to go into gold. We actually saw a rally up into COVID because the world was starting to get very nervous of what's going on. But overall, stocks took off and gold fell to the sidelines. Nobody wanted it. And then suddenly now we've been seeing gold rip higher. And there's all kinds, we got bubbles in stocks and real estate, all of these things over the past year and a half. And so investors around the world are getting nervous. I like to look at gold as kind of like planet Earth is like the hive mentality. When gold moves, it's the whole planet. People trying to get away from risk. So they get away from stocks, real estate, currencies are all over the place. And so when gold starts to take off and outperforms the stock market, this is a big warning sign. And we've seen the same thing in the past. We saw gold start in a major super cycle back in 2003, 2004, broke out. We saw a multi-year pause and stocks ripped higher during the 2006, 2007. And then out of nowhere, we just saw gold start to take off. And this goes right into the peak of the stock market in 2008. And that's because people were getting nervous. We had bubbles in stocks, real estate, currencies were all over the place. And then gold pulled back about 34% from there. So this run up that we see here, this global fear, is the same run up we're seeing right now. We're also seeing the US dollar index rally with gold. And when the dollar rallies, that usually means there's global concern as well. The dollar tends to perform very well. So there's a few things at play here. Big picture, we're kind of at the peak for gold. It might want to rally higher just because it has a lot of momentum. But overall, the easy kind of measured move is done for gold right now. And so the next awesome opportunity is going to be when gold and silver pull back and we have a bit of a recession. And that is going to be like a really great opportunity to get into precious metals again, hopefully in 2025. And after we do that, it's going to be something similar to this. We're going to see the market shake out, and then we have a multi-year rally in gold and silver. And we're going to see the same thing. So gold may pull back, and then we're going to see a huge multi-month run rally in gold, 3,500, 5,500, whatever that top will be for gold. So this is all really good. It's nice to see gold unfolding like it should. The key critical levels, it means we should see a little bit of weakness, which is what I kind of want as a precious metal investor. I'd like to see a pullback, and then it'll be an opportunity to get in before the next major run. So
while still riding a strong bullish wave, the silver market appears to be showing signs of exhaustion. Analysts suggest that any significant pullback should be considered an opportunity for investors to enter the market, though cautiously, given silver's inherent volatility. Careful position size management is advised to mitigate the risks associated with potential fluctuations. Market expert Chris Vermeulen anticipates a temporary pause in silver's uptrend over the coming months, with a likely buying opportunity emerging once a broader market correction unfolds. He believes silver could soar to $50 or even $80 during a robust rally phase, though he emphasizes the need for patience and precise timing, given the metal's unpredictable price movements. Silver's recent surge, climbing over 6% to surpass $33.60 per ounce, has brought further intrigue to the market, particularly as it now poses a financial threat to 5 major U.S. banks with substantial short positions. This unexpected spike underscores silver's capacity for rapid gains and heightened volatility, which investors should consider in any future strategy. Let's get back to the interview.
Silver did a lot of what gold did. It had a multi-year pause, and then people piled into silver just before the 2008 crisis, and silver had a big pullback. If we use Fibonacci extension from where we are right now, we can kind of take a couple different levels through here, and it gives us kind of an upside target. So based on that same type of analysis, we have the rally up, we have the pullback, and we've come to the 618 level, which we've had that pause, and now we're going up, and 35, 36 is kind of the peak. If we just draw a line across this level, you can see it's also these significant levels on this chart in the past. So if we just zoom in a little bit, you can see here, this is going to act as resistance, another significant top. We had a couple months where it kind of hit that level. We had it actually above that price and found support for a bounce. So I don't think there's a whole lot more upside again in silver. 50 would be a pretty significant run. That will be, to me, like some blow off phase, and it'll probably be given back very quickly because that's going to be an explosive parabolic move. And usually what goes straight up is going to come straight back down. To me, that $36, 35, 36 is kind of the upper level just based on momentum, based on where gold is. As you know, silver is kind of the wild card, though. It can just pop and take off. It can also drop like a rock. So silver is the definitely more speculative, more volatile play. But again, they're both right now in an uptrend. They're both lurking up near resistance. And so people just need to be aware. I don't see there being huge upside potential from here. I think just knowing we're in this pattern and that there's going to be some type of pause for several months, and it'll be an opportunity to, I think, invest back into precious metals and catch that next leg up, Because I think once we have a market correction, I believe silver will probably be like $50 and $80 and potentially higher, much higher. So there's a lot of potential, but it will probably be pretty volatile. In 2008, we saw silver, it ended up correcting, 60 something percent in that correction. So there's a lot of volatility. And to me, there's more downside risk right now than upside. But the downside is the opportunity. It's knowing it's coming. It's knowing that there's going to be a place to get back into the precious metal space. I think a lot of people are probably like thinking over here. They're thinking we've already had the correction. And I could see that. You got this pullback in this move. We've had this pullback in this move. But based on super cycles and where one ends and a new one has started, I'm a notch before. I'm back here at this peak here where we're going to go through some type of pullback in silver before it really, goes parabolic and takes off. So it'll be interesting to see how that unfolds. Of course, if there's a black swan event, it could spark oil, could spark precious metals to take off. But to me, this pattern, this very strong pattern is playing out. I believe, we're going to see more so of a pause and pullback first before we go into that $50, $80 silver mark.
Amidst global economic uncertainties and shifting market dynamics, gold and silver have emerged as strong hedges against instability. While rising yields and a strengthening dollar continue to test gold's resilience, its safe haven appeal remains robust. Similarly, silver's recent surge highlights its potential for rapid gains, though its volatility demands careful strategy and timing. For long-term investors, both metals offer distinct opportunities for diversification and protection against market turbulence, particularly as analysts suggest future price corrections may create attractive entry points. What factors do you believe will most influence the future performance of gold and silver, especially in the context of global economic shifts? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.